Welcome back in once again, Tarun Arora, CEO at Zydus Wellness, to continue our discussion forward. But Tarun, Zydus Wellness, you've announced your first international acquisition, which perhaps is now boosting investor confidence as well in this growth strategy. But tell me, why Comfort Click? How much growth can we expect on an annual basis from this portfolio, and what sort of synergies does it really bring on the table for you?
We were looking for both macro as well as micro nutrients. And clearly, VMS is a space which we recognize has a significant potential to grow both in India and abroad. And therefore, from looking at both the lens, this opportunity when it came, it fitted into the fact that it was into vitamin, minerals, and supplements. It was digital first. It's a largely online business, not largely, actually completely online business. And it is also giving us entry into markets which we do not have a presence. So completely complementary to everything that we do. And therefore, strengthens our skills around online business, gets us entry into these new markets, and allows us to play the spaces that we want to. So it fitted in from all those perspectives. To top it all, it's a very fast-growing business, which has grown more than 50% over the last 3 years. If you look at what we put out in the public space over the last 5 years, actually, they've been growing at that kind of pace. We hope that we will be able to maintain. So our plan is to grow at a high double digits going forward as well.
Right, and Mr. Arora, also help us understand a little bit more in terms of Comfort Click. Will this operate independently, or will you integrate it with the wellness current business?
So there is it's a business which has its own, capability, and therefore we will, to start with, continue to run it like the way it is. But they will be working together. There will be things that we can do together, and it's too early to do it because to say too much in details about it. But we do believe that there is a strong capability there which we want to build forward on. There is a strong value system and process and people capability that Zydus brings to the table, and we look at the best of both worlds as we move forward.
All right, but along with that, Mr. Arora, how do you plan to fund this deal? How much debt are you planning to take, and will parent Zydus Life will fund the acquisition?
So Zydus Wellness will fund all its acquisition. I think this has been very clear with us from the board. So it's a Zydus Wellness acquisition and will completely be funded by Zydus Wellness. We've taken a debt from international banks for this. So it's completely a debt, completely funded through a debt.
Right. And what about the domestic market then? What kind of growth outlook do you have for India?
So acquisition has been part and parcel of our strategy. It's been a part of wherever we feel that there is a good proposition, there is a good value. We are always open to doing these things. Something may not happen in the next few months, but at appropriate time, when we think the business is ready to, take on more, we'll certainly be looking at it.
Right, and Mr. Arora, on your international front, you aspire to grow that revenue to 8 to 10% from the 3 to 4% where it is currently right now, this over the next 4 to 5 years. Help us understand which geographies are you going to be targeting for this, and also if you're open to more such deals after this Comfort Click acquisition.
So without Comfort Click, our business is 3 to 4%, and we said 8 to 10% from the current business model, which was largely focused in Middle East, Africa, and Southeast Asia, going right up to New Zealand, where we have a presence. So we were looking at these markets. So it was more like an emerging markets focus that we have had on the international business. It's been growing at double digits, and we do believe that it will gain further momentum as we go along. Now, with the coming of Comfort Click, business outside India becomes significantly larger, as you would recognize, because it's last year it's done about 134 million pounds. So it almost can leapfrog to almost 25, 30, 35% of our business. So we'll see whatever be the exact numbers that play out. But certainly we believe that there is growth opportunities both in India as well as markets outside India, and we'll continue to build on. I don't think we are too worried about what's going to happen in some of those markets. I mean, these are, if you want to play a global business, then these are part and parcel of ways of working, where there will be a certain amount of geopolitical and macroeconomic factors which will play out. As long as you get your business model right and you work along these lines, there will be a way to manage this.
All right, but as far as the rural versus urban demand trends are shaping up, the rural demand did outperform the urban in the quarter gone by, but early monsoons did hit the seasonal brands of yours like Nycil and Glucon-D. What has been the demand trend for this quarter so far?
So even I think I was reading in the newspaper that even this next period as well, I mean this entire quarter, if I were to look at, rains will stay ahead of the normal level, and that affects while the bulk of our business for the summer brands Glucon-D and Nycil happens between January June, but there is a certain amount of numbers which follow through between July to August and September. So those remain affected, and that's beyond anyone's control. And therefore, we'll take it as it comes. All other brands are performing as per our expectation and building in a positive direction. So, with the exception of summer seasonal brands, I think our business is in decent momentum. We'll have to wait and see how these two brands shape up and how they impact at the overall level, because we can't be giving you any specific numbers as we don't. But these two brands remain under pressure. That's all I can say at a higher level.
Okay. Tarun, but since your company is also expanding into the dairy segment, will the focus now be on value-added products? Any new launches that you may have in the pipeline?
So dairy, we've already have a presence both from playing the value-added dairy in terms of having a Nutralite Doodh Shakti ghee, butter, and we have also launched cheese. We are piloting cheese in our food service business. So it's still early days, but dairy continues to respond well. There have been challenges in recent years where the dairy prices went up, but now more or less, I think it's been more stable. A little bit of seasonal shifts happen, but otherwise it's been stable. We've been doing rather well in a branded space, and we're quite happy with the way it's moving. We're not looking at expanding more dairies, but within our dairy, how we can expand into wider range of products within the Nutralite brand, and that's been our priority as of now in the dairy space.
But along with that, I do understand that you cannot share a concrete number, but directionally, after reporting that 2,700 crores in FY25 and 861 crores of revenue in Q4 of FY25, what will be your guidance on revenue and EBITDA for FY26 for the next 2 to 3 years? How can we see these numbers growing?
So I'll tell you, without Comfort Click, we have always wanted to be a double digit, which I think without Comfort Click, our trajectory over medium term remains same. This year, because the season has impacted us, so numbers may not hold to the level we would want to. So we'll have to see how it plays out. But we're still positive on our growth, and believe that at least half year 2 could get us back on a double digit, and at least 2 to 3 year framework, we'll continue to be in a double digit territory. But specific for this financial year, it will not be possible to share specifics.
Right, Varun, thank you so much for your time today.